Today's guest is Hunter Horsley, CEO and co-founder of Bitwise Asset Management. Hunter has helped pioneer crypto asset management in the US, launching one of the first crypto index funds and leading Bitwise through the evolution of ETFs, staking, institutional adoption, and most recently, bringing the first Solana staking ETF to Wall Street. Hunter, welcome to the show and happy birthday.
Oh, thank you.
Happy birthday.
Thank you. Wow.
All right, we'll have to sing at the end.
Oh my gosh.
How
Who told
old are you now?
Not Tova.
Oh, wow. Okay.
So kind of you to spend your birthday with
Yes,
us.
Yes,
of
it was
course.
my wish. Yeah. I was hoping for. Thank you for
The grind never
for
stops.
treating me.
Yeah.
No, it's a pleasure. Yeah, absolutely.
Of course. Well, let's start with our first question, which is always, what does crypto in America mean to you?
I think that crypto is so American. I think so many things when you say that. I mean, I think about this year, which is the year that crypto is returning to America. I think that there are a lot of American values, freedom, opportunity that really coincide with the ethos of crypto. And when I think about the sort of storyline of America, it often is a storyline about change and progress. And when you think about the story of e-commerce, there's a very strong American story related to e-commerce, and there's some very large American companies related to e-commerce. And I think crypto will over time be looked upon as a similar type of story. So, yeah, it's crypto in America is. Makes a lot of resonance for me in a variety of different ways.
Yeah. And I mean, you've been chipping away at it for years now. Crypto asset management wasn't a thing when you guys started it. And I know prior to that, you graduated with the econ degree from Wharton, went on to hold PM roles at Facebook and Instagram. So you went from like normal big tech to Silicon Valley stuff, like those products, then to crypto asset management, right? So like, what was kind of that transition like, and why did you decide to go
super
and do that?
intuitive journey, right?
Right
I think nobody was surprised at any juncture along the way. So at Facebook at the time, you could see a few things firsthand. Facebook had crossed 1 billion users. That at the time was remarkable. People are talking about it's larger than many religions.
What year was this?
2015. And what did you take from that? Just the incredible reach of the internet. You know, service on the internet, Facebook can find its way into every corner, every country, towns that you can't even imagine around the world. The second thing as a product manager at Facebook that you could see, so you're building products, is how fragmented the world is despite the proliferation of the internet. If you wanted to send text to anyone in the world, if you want to send images, that works. If you want to deliver a financial service, you want to do e-commerce, you want to do logistics, you have 177 different currencies, languages, banking systems, infrastructure systems, address standards, and so on and so forth. And so as soon as you go a layer deeper beyond text and images, you could see that the internet had connected everything, but the standards are still very fragmented. And then the third thing, even in 2015, that you could see that now is sort of trite to say, but you could see the declining trust in political leaders, business leaders, education leaders, just leaders of institutions. So you have that as a backdrop, and then you come across a public blockchain. And a public blockchain is a new idea that purports to leverage the scale of the internet, but to enforce one global standard for everyone. And does away with the corporate leader by establishing a consensus system that doesn't involve human judgment or human arbitration. And that appears pretty profound. And it also appears as something that kind of makes sense 15, 20 years into the internet. Not everything happens at once. And so we saw that and we thought, this is remarkable and exciting. And in college, I was the teaching assistant for the history of business in America, which is one of my favorite classes. And we looked at the press release where Ford doubled the minimum wage. We looked at the annual report from a railroad where I think it was the general secretary, who was effectively the CFO, described costs, distinguishing between variable costs and fixed costs for the first time. You know, the Big Bang, God created Earth,
Yeah.
did not create variable costs. That was a mere mortal who felt their way to that methodology. So, and then of course, everyone knows about the Industrial Revolution, and you probably have people in your lives who were born before the air conditioner in the 50s, or certainly the phone. So if you spend enough time thinking about all of that, there's one obvious thing that emerges, which is the default is that everything's going to change. That's the only thing that has been true for 250 years, which is everything half of it is going to change. And so if you start with that default, which is over the next 20, 30 years, important things are going to change, then the question is not, will everything stay the same? Or the question is just, in what direction will it change? And then you see a new technology platform that leverages the scale of the internet, enforces one global standard, is open 24/7, and does away with this messy issue of trust. And you say, that might be one of the vectors of change. So we saw that and we thought that's sort of a big thing, and kind of an inspiring thing. And at that time, it was filled with risk and really just a bunch of potential. But we thought if we could be part of that, the journey of this space, that would be a really meaningful way to spend our careers. So we wanted to contribute in some way.
It's so funny too, because like when you think about all of these different technologies, there were points in my life too where I was like, I'm not going to use that. Like Apple Pay. I was like, I have my card. Why would I do this? And now all I do is Apple Pay. I do not carry cards around. And then you talk about phones, like my parents would make fun of my texting bill when I was a kid. And now it's like, we don't even get texting bills anymore. Like technology changes and we evolve with it. And a lot of people are very resistant to it, even if they're, smart in other ways.
Absolutely. Yeah. Not everything happens at once. There's not a single instance of new technology where it proliferates, And in fact, it's a studied phenomenon, the diffusion of new technology. People may be familiar with crossing the chasm.
I was a bit left curve then on that side.
Did you meet your co-founder at Facebook?
Hong and I, our CTO, Hong is fabulous. Hong and I were best friends in college. We lived together in college. Hong was in the computer science department and a teaching assistant, and we met there.
You talked about quickly, things don't happen all at once. The period where you set up Bitwise, I think you launched in 2017, right?
That's right. Yeah.
And then you think about the last sort of 2 years, right? I mean, you go back to the launch of the Bitcoin spot ETF, that was in January of 2024. And so almost 2 years ago now, and you look at how much has happened.
That was back when I got to chat with you almost daily.
That was where we got to know each other.
Yeah.
I know. And you think about how much has happened in that 2 years, but then you compare that to the period of 2017 to 2024. I mean, can you just reflect on how much has happened in the last 2 years compared to that 7 where it was kind of crypto was sort of its own little niche world, right? Not very much was happening outside of the crypto world. And now institutions have come in. TradFi is so interested in this space, and you've become, a big part of that, bringing crypto index funds, ETFs, staking to that world.
We try to contribute our part. That's very, very kind of you to say. Absolutely, the rate of change has accelerated. I think that for people who've followed the space for a long time, it's almost necessary to completely reset expectations. Something very obvious changed, which is let me put it this way. For 6 years, Bitwise surveyed investment professionals. And so that's back to 2019, before COVID was even a thought. And one of the questions we asked is, what prevents you from investing in or engaging with crypto? And I think we provided 17 options. Every year for 6 years, the same answer was the number one thing. Can you guess?
UX.
Regulation.
Regulatory uncertainty.
Yeah.
Every year for 6 years, investment professionals said the exact same thing.
Well, yeah, because they can't touch it.
They can't touch it, or they feel that they can't touch it. That thing just changed. It just changed. The space has been around for 16 years, but the number one thing just changed like 6 months ago.
What's the new excuse then, or number one thing?
Okay, yeah. So from my
They're
vantage,
like, Hunter's calling again. What do we tell him this time?
they don't answer the phone. So Bitwise manages maybe $15-16 billion. We serve over a dozen banks. Today's my birthday. Tonight we'll be having dinner with 50 Morgan Stanley advisors that we serve. Which my wife loves. That's the situation.
I hope they're picking up the tab for your birthday.
I have no idea who's picking up the tab. Somehow I think it might be us. And there's over 5,000 wealth management firms in the US and Europe that are clients of ours. So my views are sort of a reflection of our clients. We are just sort of an extension of helping clients do what they want to do. Your question is what's the sort of what's the reason not to do stuff now? I think this is actually a pretty boring answer. So let me actually wind up. Remember when it was qualified custody? Do you remember that 2018, 2019? It's like we're waiting for the qualified custodians. There was regulatory clarity. There was what if the U.S. government bans it? There was there was applications, use cases, UX. I think the noise of those things has subsided, and now there is a main thing, and it's really simple. They're busy. They're busy. By definition, the thing that makes them mainstream and not crypto natives is that they do other things. And the other things are actually pretty time consuming. They're trying to figure out what's going on with rates. They're trying to figure out if they should be in growth or they should be in value. Should they be taking risk off or should they be leaning into risk? Should they be in emerging markets, in international? Should they be cutting back? Should they be in value? Should they be in a theme? Should they be in more private equity? Are they too much in private equity because of DPI? Should they be continuing to leg into credit? How do they feel about their venture roster? Oh, by the way, in the meantime, we want to win some new clients and I would like to take a vacation with my family. Oh, crypto. We got to do something on crypto.
Thing.
And in that moment, the role of Bitwise is that hopefully they call us and we help them with the little amount of time that they have take a step forward. But I would say that the biggest competition for the space to me now feels like people are busy. They're smart and they're very capable, but they're busy and they don't have time to have 5 different meetings every week where somebody has a different take on and they can get frustrated if they get confused. So I think that if you look at personal computers as another example, Steve Jobs and Steve Wozniak met at the Homebrew Computing Club. This was a small group of people, very early on, who would solder their own motherboards. They would be happy to talk to you about the L2 cache on the motherboard. They'd be happy to talk to you about the RPMs of the spinning disk. As the category personal computers goes mainstream, anyone in your life, if you ask them, how fast is your CPU? They'll say, I think I have 9 cores, which is not a speed, by the way. It's just been abstracted. They'll say, I like my computer. That's actually what they have to say about the computer.
Yeah.
The motherboard, L2 cache, the gigahertz of the RAM.
You're losing me. Yeah.
Yeah.
What's a motherboard?
Yeah. Right. Yes.
Yeah.
Yeah. It's the
mothership.
It's a chip that the CPU is integrated with and connects to the other parts of the computer.
Thank you, Hunter.
Anyways, but the point is, so crypto people are like the Homebrew Computing Club, and the mainstream is like your brother, your sister, your mother, your father buying a MacBook. And there's a limited space in their life to become an enthusiast of computer components in the process of figuring out what computer to buy. So if you overload them with things to say about what makes for good RAM and bad RAM and the right speed of RAM and the right brand of RAM and whether RAM is actually even important and it's too much. So I think that this is the project of the moment, which is how does the space explain itself to the mainstream in a way that they have time and space for.
Bitcoin might sound complicated, but the Gemini credit card makes it simple. Use it like any credit card. Buy lunch, gas, or your weekly groceries, and you'll earn up to 4% back instantly in Bitcoin or one of over 50 other cryptos straight to your account. No annual fee, and right now you can grab a $200 Bitcoin intro bonus. It's the easiest way to start building your Bitcoin stash. Go to gemini.com/CIA to learn more. Terms apply.
Yeah, I love that. I remember my dad told me a story growing up that when he asked for his first personal computer at work, his boss would come in and check on him constantly because he thought he was just playing like computer games. Like he didn't know like what else do you do with this machine? I want to go back to this factor of like regulatory uncertainty. You guys launched a regime or two ago in terms of how this industry has been regulated. During the Gensler era, things were really challenging for issuers, for exchanges, and it seemed like there was a lot of uncertainty for asset managers, as you kind of pointed out. We had to wait until Grayscale got the famous arbitrary and capricious verdict before they could start converting, this trust model into an ETF, and it was kind of safe to do so. What was it like kind of going through that era with that uncertainty. And then, you pointed out how quickly things changed, but like, how did that light switch sort of turn on, and what was that experience like?
Yeah, we first filed for Bitcoin ETF in 2018,
Mm-hmm.
and then it launched in 2024.
Yeah,
which is a long time. Throughout, we met with the SEC and we did hundreds of pages of analysis, including original statistical research. And I would say that we were sort of maybe naively always optimistic and always tried to sort of be constructive relative to the things that they were chewing on, and believed that it was possible that sort of the things that they needed to see to be comfortable with it were true, and so that if we could help them sort of put together that case, that they could do it. But then it sort of kept not happening. But I think the whole time we've just always thought, over some period of time, this will happen because the substance is there. Since the 2024 Bitcoin ETF launch, it's of course totally different. And now there's a lot that's possible. And there's a question of, what do you want to invest time, energy, resources into doing? It still takes time, energy, and resources. But and it's amazing. It's such an amazing thing for investors and for this space. These ETFs are truly, truly fantastic. So I'm just kind of delighted that this has happened. And that investors now get to access the space this way.
Yeah.
I don't think a lot of people realize that you actually launched or, came up with the concept for your BitW large cap 10 fund in 2017.
Yeah.
And, you're still going through the process of trying to get that into an ETF format today. Curious, what do you think the holdup is on that front? I know a government shutdown aside.
Yeah.
Just curious your thoughts on that. I know it's been a bit of a process having that go through the SEC approval. We just got the generic listing standards approved through the SEC. Curious to know what you think is going on there.
Yeah, you know your stuff. So the Bitwise 10 Crypto Index Fund, we launched in 2017. It's the largest crypto index fund in the world. It's about $1.5 billion. It holds the top 10 assets. And it's been running. It has a very long track record now. It publicly trades, but it doesn't trade as an ETF. And we've filed to convert it to an ETF, which would be, I think, a great thing. Your question is, where is it at in the process? What's the holdup? We're in regular dialogue with the staff all the time for years and years and years. And actually, a funny thing I note is that while we were working on it when Clayton was the chair, and then Gensler was the chair, and now Atkins is the chair, and in the middle, Ueda, the interim chair, the chairs have changed. Some of the staff has been the same the whole time. And these are good humans who want to do a good job, and so on and so forth. Here again, I have sort of an annoying answer. I think they're just busy.
Yeah.
Everyone's just busy.
They have so much stuff. And the SEC is not a crypto regulator.
Yep.
They're like an everything regulator.
I know.
And then the crypto space is like,
we
what
forget.
about my thing?
I know. That's literally us all the time. Yeah.
Have you looked at my thing?
Think about our bubble.
Yeah. So I don't want to be too cheeky about it, but I do think sometimes it used to be the case that there was more arbitrary, hard to understand things going on. As best we can tell under Atkins, the storyline is clear. He wants to bring capital markets on chain. He wants to allow crypto to flourish in a regulated environment in America. I think the staff understands that. I think Purse has set that tone. And so they want to now approach all of these topics and projects with that in mind. The generic listing standards create a frame for that. And I'm very optimistic that BITW will transition life into an ETF and be the largest crypto index ETF. But the specific timing, as best I can tell, has to do with just continuing to advance some of the elements of dialogue as they have time.
Yeah, I'm curious, you mentioned sort of the everything regulator, right? And there are a lot of different, you mentioned switching an index product to an ETF. I mentioned earlier, like the, Grayscale going the trust route, and that comes with a lot of pros and cons in terms of that model. Why do you think the ETF model is such a good vehicle? Like, you guys are obviously fans of that structure, but what makes that so attractive to investors, you think? And to you guys as a manager?
It is such a good vehicle. I'm giving you only long-winded answers, and I'm afraid I'm going to do it again here. For so many people, the question of investing in crypto is a question of the what. Do you want to own Bitcoin? Do you want to own Ethereum? Do you want to own Solana? Do you want to own Zcash? Do you want to own a whole host of things? How much of those things? But it's a what question. What do I want to own? But for the longest time, the how has actually been gravely important. And if you got the wrong how, you have wound up in very difficult situations. Most investors are not familiar with the how being the dangerous part. If you invest in the wrong stock or the wrong bond, it can go up and down. But
it's a decline of like mutual funds, like yeah.
Sure, yeah, but even if your how was FTX, it didn't really matter if you bought Bitcoin or Ethereum, or Celsius or BlockFi or certain hedge funds, and that has added a complexity and obstacle and time consumption to understand. Is this thing that I'm looking at a safe way of doing it? The ETF is a standard how, so to speak. It's and then it layers a number of sort of professional protections that I think give it the substance to deserve investors having peace of mind with it. You have a qualified custodian, which is a regulated custodian, and hopefully the manager of the ETF is thoughtfully diligencing, supervising, monitoring that custodian. Then you have an administrator who's keeping the books and records that's separate from the custodian and separate from the fund manager. So there's a third party who's checking to see if everything is there and counting it. For Bitwise, in the Bitcoin ETF, that's Coinbase, which is the largest crypto custodian in the world and regulated. And then you have BNY, the Bank of New York Mellon, who is checking the books and records. Then you have KPMG, who's auditing all of that to make sure that all of them are being honest and that everything's being accounted for. Then you have us supervising all of that and keeping an eye on if everyone is doing their job. And then you have the SEC keeping an eye on everything. That's a pretty great stack. The other dimension that I think is so, and by the way, you wind up with a security, not a bearer asset, which has trade-offs. The other thing about the ETF is that, like the Bitcoin ETF is 20 basis points. That in exchange for 20 basis points, you get the best custodian, you get a third party checking the books and records. You don't have to even trust the custodian. You get an auditor, a Big Four auditor. You get our undivided attention and fiduciary action on your behalf, and you have pretty tight trading. So that the cost of trading is very tight. So I just think that it's such a great instrument for investors. Yeah,
it's a familiar structure that
it's familiar as well.
Institutional investors are okay. I've invested in ETFs my whole life.
Yep.
I see crypto. Okay, maybe I can.
Yeah, and it allows an investor to return focus to the what. Mm-hmm. Mm-hmm. Instead of having to research, am I comfortable with this new counterparty, this new platform, blah, blah, blah. It's just, do I want exposure? How much exposure do I want to Solana? Do I want exposure? How much exposure do I want to Bitcoin? And you can focus on the investment decisions, which is the other thing to note about ETFs, which may be obvious to all of you, is that there's $100+ trillion that can't really access crypto through the other means. So for instance, in the US, there's $15 trillion in IRAs, individual retirement accounts, for which this is by far the easiest way to access it. For financial advisors in the US, it's about $40 trillion. It's pretty much the only way to access the asset class. There's $40 trillion in pensions. There's $4 trillion in endowments and foundations. So there's a lot of pools of capital who can't just open a Coinbase account. And it's enabling, builds a bridge to those investors and pools of capital as well.
Yeah, is that the bet you guys are making? Because when you say like 20 bips on a product, and I go, you guys could be like a very good asset manager across probably many different types of assets. But, you see, I think in that model, Vanguard, going super, super duper low fee, and it's fine because it's like 5 trillion or 8 trillion or whatever they're at now.
Yeah.
Is the bet that you guys are making that you're just going to keep eating into that 100 trillion, and that's why this business is so interesting to you?
Yeah, I think that there's a lot of investors to serve, and I think there's a lot more dollars that will want to have exposure to crypto. It's also the case that Bitwise today, we're best known for ETFs, but we don't only do ETFs. So US ETFs is about half of the business by revenue. And the Bitcoin ETF is less than 1/10 of the business by revenue. So it's called Bitwise Asset Management. So we do a lot of different things to manage assets for clients. We have US ETFs, we have ETPs in Europe, we have alpha and private solutions, multi-strategy solutions. A very popular thing this year has been options overlays to generate income on clients' Bitcoin. They hold spot Bitcoin in a qualified custodian. We design an option strategy for them to generate income. That has been growing incredibly. And then we're a large staking provider. So for an investor who has spot Ethereum or spot Solana, and they say, we want you to stake that for us as well, so that we can generate that yield and then help us with reporting and tax and compliance. And so the view for Bitwise is that crypto will become a mainstream asset class, an alternative asset class. Investors will continue to be busy. They want leverage, and they want to know that somebody is watching all of the details. And there are more and more things that they want to do. So many start by investing in an ETF and then end up doing more things with us because they have a relationship that enables them to do that. And so that's sort of the theory of the business. And there's just also, I think, a lot more to come in terms of people investing in the space.
Yep.
When I think of Bitwise as like probably investors, I would think of like, institutions, more sophisticated investors. Do you guys ever want to appeal to like the general mass audience of people who are downloading an app in the App Store? Or is that really not the category you guys are going to go for?
We are very focused on investment professionals, but we're not like not open to serving really any investor. It's just that our ability to interact with an individual is limited, right? We're 130 people. So if anyone who listens to your show emails investors@bitwiseinvestments.com, somebody at Bitwise will email you back.
Be careful what you wish for.
Yeah. I'm just saying, Bitwise is not like we're not willing to interact with certain types of investors. And there are a lot of investors that own our funds. A challenge with ETFs is that we don't know who all of them are. So if you buy shares of our ETF on Schwab, we don't know that you did that. Through a variety of means, we know that it's probably over 100,000 investors. In the case of wealth management, there's a sovereign that just bought one of our funds 2 weeks ago. We of course know those firms, but Bitwise's orientation, the reason that we do this, there are other things that people can do with their careers and in crypto. The reason we do it is we think it's really fun to get to. We think that investing and people's money is one of the most important parts of their lives. Probably their family, their health, and then their money are the three most important things. Yeah. And if something happens to one of those three, you don't really care about your Facebook account or your Netflix.
Or your Instagram.
Going
back to your job.
Yeah, or your Instagram. And so to get to interact with people on one of these three most important topics, and in a space that we think has a ton of opportunity where we can actually be useful and helpful, that's sort of something that I think everyone at Bitwise kind of loves and finds meaningful and interesting. And so we love to be useful to investors.
That's fair.
Yeah.
Well, you mentioned your staking business. So let's talk about your BSOL debut, which was last week. So we're recording this. We timely record these things. We try not to put dates on things, but we're recording this on November 6th. So
it's his birthday. Yeah.
It's your birthday. So there you go.
Now it's noon.
Now it's, yeah. So you came to market during the government shutdown by doing something. You removed the delaying amendment from the S1, and we don't have to get into the whole sort of like
Ellie knows everything.
Esoteric narrative
really
around
does.
this. We can get into it if you want to. But basically what happened was no other issuer did this before you guys did. So it gave you a first mover advantage, which means you were able to come to market before anybody else. It's given you, a great head start. Some stats as of today, you had 24 million in inflows. You've had 17 million shares and 416 million in assets under management since last Tuesday when you debuted on IC Arca. Do you think being first gives you a lasting advantage? And especially once bigger investors and bigger competitors like Fidelity come in, which they surely will because they've cottoned on to the whole, okay, yes, they're going to update their S1s and maybe launch when the government's still shut down with that delaying amendment. But you guys are clearly first. You clearly have the advantage. You're doing really well. Do you think you can hold on to that first mover advantage?
Great question. I'm sort of like anyone else. I'm always trying to sort of understand what to expect and what's going on. As you said, the launch is remarkable. It's the largest ETF launch in America this year, out of 850 ETFs across every asset class, across all of the issuers that you've heard of. Every financial institution that's launched an ETF. The biggest one was BSOL last week,
That's huge.
Which is remarkable.
Yeah,
that's not just because of Bitwise. That's because of Solana. Nobody's buying BSOL just because of Bitwise. They're buying it because they want exposure to Solana, and they find it compelling for reasons we could talk about. So I just sort of see that, and I think it's remarkable in a variety of ways. To your question of the competitive dynamics, with ETFs, there's a real advantage to, I guess I'll call it scale. I'll give you an example. There are a number of firms, hedge funds, certain institutions that can't be more than 5 or 10% of the AUM of a fund, but for whom $50 million is a very small amount of money to invest. So if you're a $1 billion fund, then they can actually invest the amount they want to invest. But if they invest $50 million in your fund is even bigger, which makes it even more useful for the next investor. So there's a way in which the size and the volume are features. So if you take two funds that are the same in every other way, but one of them is larger and has more volume, those are features. It's not just the fees, it's not just the custodian, but the volume and the size are important features. So there's a way in which BSOL has these features that are super useful to investors. Of course, the brand of the issuer and a number of other things. And I would also say the fee. So one of the things that I think is situates BSOL well is that historically, what some issuers do when they are first to market with something is that they want to be rewarded by charging investors a very high fee. And they say, we did the work to get here first, so you're going to pay us. We priced at 20 basis points, which is a very low fee. It's lower than IBIT, which I think is very good for investors. And so I think this is going to be a very useful ETF for investors, given the response that it's had so far.
Why did you price it at that?
Well, sort of because of what I just described. I think
to be reasonable.
Yeah, I think.
I mean, yeah.
Yeah, I think investors do care about fees, and you can temporarily have a higher fee, or you can just cut to the end of the story and say this is going to be the fee that is the reasonable fee for investors. So just start there. One other dimension. I'm saying so much about Bitwise and giving you very long answers, but one other dimension that I think about is as an asset manager, what do? People entrust us to steward and protect this very important thing in their lives, which is their money. They trust us. So your reputation is everything. And if they experience you putting yourself before them, or maybe slightly taking advantage of them, or maybe doing something that looks maybe a little self-serving, it's the same way you would feel about that with friends and family if you saw a certain decision. So, Bitwise is hoping to be around for a very long time, and we have been around for a very long time. It feels like to me. And how investors feel about us really matters. It matters even more than $100 million of assets in a fund in any given moment. If they don't feel like we are here not to build a lucrative business for ourselves, but we're here because we actually like and want to work for them, then I think we've done something wrong. So there's both sort of like the business analysis of how to set a fee, but there's also just what is it that you think you're doing as a company? And the way that Bitwise views the world is that success is that investors give us the opportunity to be their partner on the space. And so if you view it through that lens, what would be the thing that lines up best to that objective?
Yeah.
We talked to your co-founder yesterday at the Chainlink event, Hong, and he made an interesting point about how your launch was special because you did the NYSE bell ringing as well. And you had not just Bitwise's team, but you had the whole Solana team there as well. You had Anatoly, who gave a big speech. You had a lot of people from the Solana ecosystem who came to celebrate with you guys. And so, from his point of view, it was kind of like, Bitwise Solana ETF is the Solana ETF.
And it was for them too. Yeah.
Exactly. So when other competitors come to market, finally, there will be Solana ETFs out there, other products, but yours was kind of the one that was like, this is the first, and this is the one where the Solana community kind of came and rallied around it. So interesting to kind of hear your thoughts on that.
Yeah, I just think, I kind of touched on it before, but nobody invests in the Bitwise Solana ETF if not for the work that the Solana community has done to become an asset that people want to invest in. So there's not a story about Bitwise here. There's somewhat of a story about Bitwise, but really there's a story about Solana. And what the ETF taking in $500 million in like 7 business days is really a story about Solana. We now opened a door and built a bridge to a lot of investors, but them wanting to walk across that bridge is a story about Solana. So I love getting to share that experience with them because I really think that the bell ringing is to celebrate Solana and that community of people.
Did you expect that amount of demand in 9 days?
No.
Yeah.
Like I was shocked when you said it was the largest of the year across all industries, and like Solana is huge to us in this industry, but then when you think about just like the broader sphere of ETFs, like that's crazy.
Yeah, and also think about the market sentiment at the moment.
Yeah.
I'm wrong all the time.
Hey, it works out this time. It's good to be wrong in this situation.
Yeah. Well, so we've talked a lot about Bitwise. We're starting to talk a little bit about Solana. I want to ask you, we talked a very little bit about GLS and the impact that that's going to have on filings. Solana is one of those first assets under GLS to kind of reach this true like commodity status. And obviously you talked a bit about the tech and I think the sentiment. Do you see generic listing standards opening the door for more products, more different assets that you guys would want to launch ETFs for? Or how do you see that kind of playing out? Because right now it's a relatively narrow set of criteria. People are just like Coinbase US futures. But it should broaden. How do you guys view that as an asset manager? Like obviously very close with Solana, but what's your view on the broader sort of impact that could have?
Sure. Yeah. So, we collaborated with the SEC staff on the generic listing standards, and it started out more complex and it wound up very simple, which is if there are regulated US CFTC regulated futures, then an ETF can be launched. There's actually one other dimension of it, but we can leave that alone for a second. And then so it's Coinbase and Bitnomial and CME, and if they have futures, you can launch a product. I think that's about 10 different assets now. I think it enables a lot of additional. We have filings for XRP, for Chainlink, for Avalanche, and for Dogecoin. And we also have filings that wouldn't qualify at the moment through generic listing standards for Aptos and for Near. So we would like to provide access to more of the opportunities in the asset class. The generic listing standards, I think, open the door meaningfully. And I think that set will expand as new futures contracts are launched or as the criteria of the generic listing standards is expanded a little bit further, which I think is quite possible. Yeah.
Do you see long-term growth in crypto ETFs coming from single asset products like the ones you just mentioned, or from from
index funds?
Index funds.
Yeah.
Correct. Yeah. And what are institutional investors? What are their appetites like right now for which?
Yeah. So I think the story, it's a great question. I think the story for the last 18 months has been single asset exposures. And I think there's about to be a slight divergence. So there are 2 wirehouses in the US that just approved a Bitwise product in Q3 for the first time, which is amazing. It's a lot of work for them. And we talked a little earlier about the challenge of having the time. I think that wealth management is going to soon turn towards indexes like BITW, or we have an index of crypto companies that are publicly traded that has grown to over $500 million this year. That's BITQ. I think that those will become more popular as people say, how much of each of these coins am I supposed to own?
Right.
And a client's portfolio might have like 10 ETFs in total for every asset class. They're not going to add another 10 to build their 5 to 10% allocation to crypto. So I think that will I think that will trend for wealth management. For individuals, I expect it will continue to be single name conviction investing. You probably know people who own NVIDIA stock and have not really thought about TSMC, or they like Microsoft and they haven't really thought about Oracle. They just build conviction around specific stories and specific opportunities. On the institutional asset manager side, like hedge funds, I think it'll also probably tend towards either single exposures or things that have futures contracts.
Bitwise also isn't just about ETFs or index funds. You guys also have the staking side of the business. And I know the SEC is now recognizing staking as a non-securities activity. How do you kind of see that expanding that side of the business for you in the coming years?
It's so awesome.
I knew you were going to be excited.
It's so awesome.
You're like, finally.
Yeah. People know us for ETFs, which and I love it. I think it's all, I really love what Bitwise does. And I'm grateful that clients let us do it for them. So Bitwise, there's one mental model of Bitwise, which is we have these ETFs, and we work with financial advisors and we help them build their first, allocation and exposure and so on and so forth. And we do more and more there. We design models for them now. There's a whole bunch of stuff. We also serve what I might call crypto native investors who have a lot of digital assets, and they say there are certain investing things we want to do. And we like the idea of doing it with a partner who is professional enough that Morgan Stanley trusts them. And they have a registered investment advisor. They have a commodity pool operator. They have a CTA that, people want to feel trust, even if, crypto natives too. So we now have interesting things that have developed this year. People staking with us, which is non-custodial. It's not a fund. We implement open source software called Vouch and Dirk that we've authored. And that software is actually very widely used. It builds over 15% of all Ethereum blocks. It's open source, so others can use it. So I'm not saying that we build 15% of it. I'm saying that our team authored that software and maintains it as an open source library. And then we implement it to stake for clients. It has a unique approach to client diversification to reduce slashing risk. And one of the things I really like about that part of the business is, of course, it's really fun to serve people who own a lot of crypto assets because they have a lot of conviction and they're thinking about slightly different things. And also, as a byproduct of we stake several $billion, we communicate around, for instance, Pectra. We were very involved in communicating with the Ethereum Foundation and others about that upgrade to the network. And I think that again, sort of is additive to what somebody who buys our Ethereum ETF would be glad to know, that we are informed on the Pectra upgrade. Even if they don't want to hear about it, they're just glad to know that substance exists in the building. Another thing that I mentioned is for people who own large amounts of Bitcoin and want to continue to own large amounts of Bitcoin, but are interested in generating yield. There were some explorations around staking Bitcoin and a number of other things, but what has turned out to be very popular is we design an option strategy with them, usually selling calls, sometimes puts or straddles, a variety of things. And that can generate 5 to 10% annualized yield, which if you're somebody who has $100 million of Bitcoin, doesn't want to sell it, that's a pretty meaningful development. You keep it in the cold storage custodian. And then a third thing for the more, I would say, crypto native clients this year that has been so fascinating to me. You guys may remember, Ellie definitely remembers that when the ETFs launched, in-kind was not allowed.
Right.
Yep.
In July, I want to say, they changed that so in-kind is allowed. And that's very normal for all ETFs. And so it's finally true for crypto
What's
ETFs.
in-kind?
Yeah, just for our listeners who might not
And
know.
for Jackie?
Sure, yeah, for everyone. Yeah. I live in a very arcane corner of this universe.
I'll ask the questions. Go ahead. Yeah.
Sure. So if you want to buy shares of the ETF, you can either send in dollars to get the shares, or you can actually send in the asset the ETF itself holds. So you can send in Bitcoin, and get the shares.
Yeah. And so there's a huge impact. The digital asset treasuries, like that relationship was also impacted by this. Like,
Yeah.
So you weren't allowed to do that though when this
Under
started.
Gensler, no.
Yes, exactly. Under Gensler, no. And it brings a lot of efficiency to the creation of redemption process, basically to the how the shares trade. So it's very common across all types of ETFs. So that was changed, I think, in July. And we worked with an AP to do the first such transaction where they delivered Bitcoin and we give them shares. And you can do it for other funds as well, like the Solana ETF. And I tweeted about it, as I'm wont to do.
Yes.
And a bunch of people pinged us. And it turns out there are a lot of people who hold large amounts of spot assets who actually want to swap them into the ETF and own the ETF shares instead. And I'm talking about sums in the 8 and 9 figures. In fact, it can only be done at those size sums today. So that's another thing that has come up with crypto native investors and is super interesting. I can understand why now.
Why couldn't it only be done with those 8 and 9 figure sums?
This is like the most TradFi thing ever. So what makes TradFi? It's that it's sort of opaque and arbitrary and like
because we said so.
It's kind of that type of thing, but it's like kind of if they want to, they could for you, but like there's a policy, but they know them really well. So the policy, so basically the firms that can create and redeem generally have account minimums, and their account minimums are like $50 million. So if you're like, I want to take $25 million of Bitcoin and swap it for ETF shares for a variety of reasons. Maybe I want to borrow against the shares, or I just sleep better at night, or I want to fit into my estate plan for my family, whatever the reason, their account minimum is still $50 million. So I think that the smallest now is 25. Maybe it'll get lower over time, but it's super interesting.
I'm curious. So we're here now. You mentioned this like esoteric sort of universe. What do you think about NAV? Like just as a concept, like in terms of, because I think that's one of the really tricky things for traditional investors. Maybe you have a more sophisticated base that's doing a bit more evaluation around it. It's not like I think Matt Levine has the, how long can the buy 1 Bitcoin for 2 Bitcoin sort of trade last? Like, how do you think about that as more and more investors get into this asset class and try to learn about sort of a couple different prices that you're actually kind of monitoring to know how this is working?
Yeah. Well, so for the ETFs, it should usually be pretty consistent and tightly track the NAV. So I think
NAV meaning?
NAV means net asset value, and it just refers to the value of the assets held by the shares.
Right.
And with an ETF, one of the reasons people love ETFs is that it's pretty much 1 for 1.
Yeah.
It's almost 1 for 1. And actually the websites for ETFs will report any deviation, but it's usually very tight. Now, of course, this subject matter is much more interesting with the Bitcoin Treasury companies and the DATs, which maybe is what you're thinking about.
I was thinking about the DATs.
The DATs, yeah.
The DATs and their NAVs.
Well, it's because of the contrast, right? Because as you mentioned, like the ETFs are usually so 1-to-1, but a lot of interest in those vehicles, came in the last kind of year. So I'm just curious, like as an asset manager, what do you think about it?
What do I think about the premiums and discounts to NAV?
Well, yeah, or like just the vehicles in general compared to some of the products that you guys work with.
Okay, there's
that was like 6 questions. So
right,
Good luck.
right, yeah. I think you basically just asked me what I think about Bitcoin Treasury companies and DATs, and NAV. The NAV is a component of that. Yeah. I think there's 2 ways of examining the question. One is from the perspective of being an investor. The other is from the perspective of owning assets in this ecosystem.
Yeah.
From the perspective of the asset class, I think that this is fantastic. If you think about many crypto ecosystems, you have sort of the open source development community, which sometimes has a labs entity that is working on developing the code base and capabilities. You then will sometimes have a foundation, which works on fostering grants and other undertakings, sometimes commercial efforts to drive adoption. I think that the DATs and treasury companies are now becoming a third leg of the stool that is doing investor relations to the public. So if you think of a typical public company, they have an investor relations team. They do earnings calls. They organize how they communicate their story to the busy public. And I think that the DATs and the treasury companies are bringing that leg of the stool, which is they're focused on thinking about how to tell the story of this asset and asset class to the public, and they're great at it. There's so many great Ethereum treasury companies, Solana, Bitcoin, so on and so forth. Additionally, for most ecosystems, they can be a power user. So if you're a DEX, if you're a lending protocol, they are simultaneously sophisticated, early adopters, and have size. Almost like what some of the crypto venture firms have been. And I think that's also really healthy. They can be a power user that helps foster the early development of applications on the various ecosystems. So through all of that, I think it's great. From the investor's perspective, I think it just depends. It just depends on what you want. They're very popular for investors. I think if you want, okay, why do investors buy it? Investors buy it sometimes because they can, it's easier to buy equities. So for instance, the largest owner of MicroStrategy stock, or strategy stock, MSTR, is a capital group mutual fund manager named Mark Casey, who has a lot of conviction on Bitcoin. And he runs an equity mutual fund. He can't buy a Bitcoin ETF. He can't buy commodities in an equity mutual fund. We know a sovereign who wants to buy Bitcoin, but it's much easier for them to buy equities for infrastructure and process reasons. So that is really powerful. Also, in some cases, they can generate yield through active management and on-chain activities, staking, et cetera. So, and then of course, capital market sector. So I think if you want, if either it's a format that you can use and you can't use other formats, or if you want that pursuit of alpha, basically, then I think it can be a good solution. I do think that we'll probably wind up with one, maybe two for each asset.
Yeah, you see consolidation coming there at some point.
That's what I mean. I'm not a genius, but
no, but it's just, it becomes like a math problem at some point. Like,
right. Yeah. And people are busy, and there's only so much time and attention. Yeah. The funny thing is,
people are busy.
Is that
that's the moral of this episode.
Yeah,
right? It's like people are just busy.
Right. People are busy.
Just buy B-Sol. You're just busy.
Yeah. It's not conspiratorial. It's not like some premeditated thing. Right. They're just like, sometimes I remember one time we had a client. This is unbelievable. We had a client that we've been talking to for a very long time, and he calls up one of our relationship managers and he says, "Hey, by the way, I finally got it done. We put $10 million into your Bitcoin ETF." And the relationship manager goes, we didn't see a $10 million trade today. And he goes, "Yeah, I did it. I punched in," and then he named like a different ticker that was very similar to our ticker, but not our ticker.
Oh no.
He just kind of messed up the ticker. he bought a different fund.
It happens.
Oh
Sometimes the explanations are like incredibly simple. But the funny thing about DATs is I think the term DAT was coined like 4 months ago, right?
Yeah, it's pretty new.
Digital asset treasuries.
It's
DATs. When someone said DAT to me first time, I was like, "What are you talking about?" And then they spelt it out, and I was like, "Oh no, there's
not
term.
another jargon." It's
If we were chatting last November and said, "What do you think the big topic of 2025 would be?" You would say the Strategic Bitcoin Reserve, and instead it's DATs.
It's DATs.
Yeah.
You know, it's kind of unbelievable how emergent.
I was just looking up who the top holders of MicroStrategy are, and Vanguard has 6.5%.
That makes sense.
And so Vanguard is very, very cautious.
Yeah, I think it's probably that in that instance is probably the index.
Yeah,
they're index funds.
pretty wild.
Yeah.
Do you personally own any DATs?
That's a great question.
Got him.
I own.
He's like,
well done. Okay, I know what I own. I own MSTR. I own Ford. I believe I own EZ, but then I own OwnB, which is our ETF index of Bitcoin treasury companies, which is of course an approach that I like. And then we have these ETFs, which you may or may not be aware of, that are options income ETFs. So you've heard Michael Saylor talk about volatility as sort of the fire that powers the engine.
Yeah.
So you can sell options on these very volatile stocks and get paid a lot of income to do that. So IMST, ICOI, ICRC, that's for Circle. The second one was for Coinbase. The first one was for MSTR. Those are all ETFs we run that sell options to generate income. Some of them have annualized distribution rates of over 100%.
Is that because the spreads are so wide? If there's so much volatility, or where's?
It's because if things are very volatile,
Yeah.
then you have to get paid a lot to be willing to sell somebody the right to buy or sell you the shares.
Yeah.
So the more volatile something is, usually the richer the options premium is.
Yeah.
The options premium is just like if I give you the right to buy my Bitcoin from me at 110,000, how much would I require you pay me to give you that right? Probably a reasonable amount, because I think it's very likely to happen. So the more volatile something is, usually the higher the premiums that people have to be paid to write options. And so if you're an investor who says, I'm willing to trade some of the prospective upside to get paid that very rich premium, and that's more attractive to me than, for instance, buying some bonds or other ways I might get income. So we've seen ICOI, which is the Coinbase one, IMST, have our suite of options income funds is new since April and has grown meaningfully this year. And so that I own all of those as well.
How are you guys thinking about education now?
Mm-hmm.
Because I think once upon a time, most financial advisors, crypto was not part of the portfolio makeup that they were advising their clients to get into, right? But I think that has changed in the last year and a half. What are you guys seeing in terms of when you make these calls, or even when people are calling you and saying, how should I advise?
Mm-hmm.
What are you doing in terms of education these days?
The most important thing that we do, I may have said this to you before, but the analogy I like to give for Bitwise's role is if in college you had a required class, maybe it was calculus, maybe it was biology, and there was some research professor who was required to lecture but didn't really like teaching, and would roll into some major freshman auditorium and go up to the chalkboard and start putting things on the board. And you kind of felt like, this is boring, I'm bad at this, and I'm probably not going to study biology. But you had a homework assignment. So then you'd walk into office hours and hopefully find a TA that could be helpful and could help you step through what you needed to know and maybe make you feel more confident about what you know. That's Bitwise is supposed to be the TA. So the answer to sort of how we approach helping clients with what they're thinking through is it sort of starts with, what are they thinking through? And then we have 50 different materials. We do over 10,000 meetings and calls. We just do a ton, and it depends on the clients. Things that are common right now that we're hearing from them are, where should I put it in a portfolio? Who else is doing this? How big should I size it? What should I sell to buy it? Because often they're not sitting on a lot of cash. And then a recent thing is, in an institutional context, one of the ways that you decide how much of each thing to own is you have an expectation about the return potential of different asset classes. And the model that you use for that return potential is called a capital market assumption. So we had never been asked for capital markets assumptions until this year. And then 12 firms asked us for it. So we just put together capital markets assumptions so they can then take that model and plug it into their model and see and use that as sort of an assumption as a variable. So that's coming up. I would say, taking a step back from those particulars, the theme is there's a lot less, tell me how mining works, what's the impact on the environment, a lot less of that sort of just curious, broad, and a lot more blocking and tackling around what should I do, how should I do it, how should I size it, when should I do it, who else is doing it, sort of getting things done type topics. And I think an emerging one that is not in focus just yet, but will be, is I can't buy 5 different crypto ETFs. What should I do? And that the intuition that will follow from that will be index.
Yeah. And wealth advisors too, you must be seeing, you tweeted about Morgan Stanley the other day, right? Changing their allocation to, I forget what the percentages were.
Yes. Yeah. They put out guidance in a growth portfolio. I want to be very thoughtful about the specific words that they used.
Yes.
But I think that they thought they articulated that it is maybe 4% in a growth portfolio is the number. I can't remember the words. Mm-hmm. It wasn't recommended. It was maybe allowable.
And it was Bitcoin specifically?
I also can't quite remember.
Yeah.
Right
okay.
now.
Well, on that note, I was just going to say we've been talking a lot about institutions coming in and the enthusiasm you're seeing there. Speaking of tweets, I think you had a tweet today that was about, I think it was JPM raised their price target for Bitcoin. And you're seeing a lot of crypto native managers get a little more bearish. Can you just comment on, like, do you think that's really happening? We've obviously sort of talked about when we're recording this. It's been a rough, it's called like 12 days as far as crypto market sentiment goes. Why do you think that's happening?
I think that the crypto asset class has split into two separate worlds. I think there's the world of enthusiasts, which I would count myself a member in, who are on Twitter, who have followed the asset closely for many years, who own a meaningful amount of the asset. And the training of the last 10 years is that, like, big things happen almost every day or every week. And you hear about pretty much all the big things. Like right now, people are trying to figure out, like, who blew up, right? And they expect they expect to hear.
Yeah.
Because that's the nature.
That's
crypto historically, everything has been knowable via Twitter. And then there's this new constituent as a byproduct of the asset class going mainstream, which I'll just call the mainstream investor. They are both sometimes not on Twitter. They are not prone to publicizing or sharing publicly. You know, we work with 12 banks. So far, 0 of them have said that I'm allowed to name them. You know,
I was just about to ask. Honestly.
They're literally comfortable putting their clients' money in crypto, but they don't want me to say that they're doing it.
Wow.
So not because they don't think that they've made the right decision, but they just don't have an inherent desire to publicize that they're doing it. And I think historically have wondered if people would make their lives difficult, even though they think it's the right thing to do. So I think this world is just sort of not on Twitter, not sharing as much. And this world, oh my gosh, it's incredible. I've never seen anything like what's happening with mainstream investors. The third quarter of this year was the best quarter amongst the Bitwise distribution team ever in 7 years. In terms of new clients, people investing in crypto, using our funds, including 2 of the largest banks in the world approving after diligence Bitwise and making it available to their clients. So I think the storyline over here is amazing. And you all know this because you interact with people at banks, for instance, or financial institutions. And then over here, I would say that there's just less access to what's going on over here. So I think in the enthusiast community, they're not hearing about it. So they're wondering, like, what's going on? I'm not seeing anything going on. So I try to share anecdotes, and you guys run an incredible show and you bring guests on and they share storylines that allows, I think, the early adopter community to understand what's developing. And then I think that sometimes there's a little bit of an expectation of a pace that just needs to get reset. You know, I said earlier in this conversation, I think people almost need to throw out all of their assumptions from the last 15 years of crypto and start anew this year. And I think for mainstream investors, something happening in a month is fast. In a quarter is pretty fast. Mm-hmm. And in a year is not slow. Mm-hmm. And that is just like not what we're all used to.
When does that change? The banks finally giving you the green light to say, hey, we're giving you your money giving our investors money to put into these products. Does that change ever? Does it change sometime soon?
Allowing investors to invest in crypto?
Well, no, allowing you to talk about it.
Oh, yeah, I think by the end of the year. I think
really?
You're already starting to see it. Banks are also very big places and they have many divisions. And so, you know, some divisions are just more prone to sort of speaking publicly about things, whereas the wealth management divisions are usually just quieter in general. But, you know, I think at Swell this week, I mean, Citi was there.
Yeah.
Who else was there? DBS.
Everybody.
AV was there from
A
DBS.
lot of suits. A lot of suits.
Right.
Yeah.
It's the year of the suits.
Yeah. Hunter, thank you for coming on. I don't want to let you go. We have 2 more questions for you, essentially. One is, as a CEO in crypto, through all the ups and downs throughout the past 8 years, what is the biggest lesson you've learned? And then also, can you leave us with something else that we haven't discussed that you think others should pay attention to? That's usually the last question, but I really want to know like the
We're
biggest
doubling
lesson
up.
for you.
Yeah, I like it.
I think how important it is that teams are willing to work on things for very extended periods of time. I think in crypto, there's a lot of contemplation of, is this a good idea? Is this a compelling value prop? Do they have great backers? Do they this, that, the other thing? Will they work on it for 10 years? And that has actually turned out to be the thing that there's a wide range of answers to that question. So yeah, I think maybe I just see that more viscerally. I think it was Paul Graham or Steve Jobs has a quote about startups that goes something like, the leading cause of death for startups is suicide. I think that in crypto, people sometimes forget the human element, which is that there's a team, there's people behind this. One of the things we do with the Bitcoin ETF is we donate to, so Bitcoin Core has 6 core maintainers. Those are humans. They could do something else. I think on average, they make $150,000 a year, and they could go today to Google and make $500,000. They choose not to do that. They choose to do this. And there's investors who own $2 trillion of assets that benefit from the work that they do. And there's another maybe 40 core devs. So we contribute some funding to some great organizations there. And that's related to the topic that I'm bringing up here, which is that I think that teams who are willing to work on things for very long periods of time, and each of you have been involved in the space for long periods of time, I just think that is so simple in a way, and also has borne out to me to be quite important.
And then what else are you watching that you think others should pay attention to?
The two things that to me I think are not as commonly accepted is that I think this is e-commerce. Like I'm almost certain that this is e-commerce. What I mean by that is the internet shows up. Amazon says, why don't you buy books online? And people are like, it's not safe to put your credit card online. You're gonna get hacked. And then people say, okay, you do that, but this is just a bookstore online. It's fine. And then eBay grows in popularity, and they go, it's not serious. It's just trading beating babies. It's not serious. It's not a real business. And it's not that people, there's a lot of heritage in Sears, but people love those institutions. It was not angst or anger that led to the end of those institutions. It was that the internet showed up, and some people recognized it and positioned themselves for it. Others didn't. And then there were some new companies that came about. Now you would much rather be Shopify. You're happy to be Walmart. You're happy to be Target. You'd much rather be Shopify than Sears. And I'm almost positive that that's what's happening in financial services for the next 2 years.
So who's the cover? Who's the Amazon.bomb founder right now that you're watching? Who's got that right?
Who has it?
Who has to use the analogy of, because Bezos obviously was on the cover of Amazon.bomb.
Yeah.
That was a negative cover, I'm guessing.
It was.
Yeah. I was young then.
Yeah. It was some serious fun. Some serious fun.
Oh goodness, good question. I mean, I think it's either Coinbase or Circle that people kind of like love to dig, but they both have a view into how the next 3 or 4 hands are going to be played. I don't know if their views are correct, but they're looking forward, and I think and I think stable coins are going to have an unbelievable impact. And then the last thing I chime in with is that I think that tokenization is this Rubik's Cube that is not actually figured out yet. There's a lot of perspectives on tokenization. I'm certain that you can get a block of color on this Rubik's Cube, but all of the mental models I'm seeing still have patchworks of inconsistent colors. So I'm still sort of turning the Rubik's Cube a little bit, but I think probably most people have it wrong. But I'm just not sure what right is yet. It doesn't feel to me yet. Tokenized money market funds, I don't think are it. I think that they have a role to play, but I'm just not 100% sure yet what it's going to be.
And then when we spoke before the episode, you mentioned that next year is going to be a different theme for crypto. What is that theme going to be?
Yeah, I think next year it'll be about metrics. I was chatting with a fantastic investor who said we're moving from the tell me era to the show me era. And I think people are going to be looking for charts and they're going to ask you numbers. I think within 3 months, people are going to be delirious with the logos of financial institutions like launching a product on a platform. It's almost at this point hard to keep track of like which financial institution is tokenizing something, is integrating something, they're doing a pilot with something. I think that it's a great development, but I just think at some point people are going to say, okay, and how's it going? And I think that will start to be the conversation next year, which is only possible because of the incredible circumstance, which is there are great people inside of these financial institutions who are embracing the space, and the space is now in 2025 able to engage. So I think that's great. I just think that there's going to be a step after this. And I want to add that with the internet, similarly, like there was a time where people were just talking about eyeballs and page views.
Yeah.
Now we talk about DAP, MAP, ARPU, average revenue per user. We talk about CAC. It's a natural course of a category that over time people start to develop mental models and specifics. And I think this is going to play. The punchline: people are busy, and crypto is kind of going to be like other technology categories, and it just has its own.
There we go.
Yeah.
Hunter, thank you so much. I feel like we could hold you for another bajillion hours, but you got to go celebrate your birthday with Morgan Stanley.
Yeah. Not many people can say that.
Thank you so much for coming on.
My pleasure.
Thank you.
Thanks, guys.